Hi guys, it's Stock Curry, and in today's video, I'm going to give you all the news you need to know for Thursday, plus I've got 5 undervalued stocks to buy now, plus 4 I've never talked about before, and I've never heard any other YouTuber talk about either. So let's get into it! Alright, let's start with today's market news, and oil prices rose to the second highest price in history today. The only other time oil was higher was during the 2008 financial crisis. These high oil prices will continue to put downward pressure on the markets as high oil prices result in inflation rising in nearly every category due to the higher shipping costs that high oil prices cause. Jerome Powell spoke to Congress on Wednesday and said that while the Ukraine's war impact on the U.S. economy is highly uncertain, he is going to recommend a 25 basis point rate hike in March. Keep in mind that the point hike is a vote, so just because Jerome Powell recommends a 25 basis point rate hike does not mean that's what the rate hike will actually be. It could still be 0 or 50 depending upon what the Fed members vote on. Jerome Powell did say to Congress that if inflation comes in higher than expected in 2 weeks, he would be prepared to move more aggressively by raising the Fed funds rate by more than 25 basis points at one or more meetings. CME futures are now pricing in a 2% chance of no rate hike, a 98% chance of a 25 basis point rate hike, and a 0% chance of a 50 basis point rate hike. Jerome Powell is also scheduled to speak to the Senate on Thursday, so watch out for any other news from him on Thursday. The ADP employment numbers were released on Wednesday also, and they showed that U.S. private payrolls increased by 475,000 jobs last month. January's numbers were also adjusted upward by 810,000 from the initial loss of 301,000 jobs that was reported in February to an actual gain of 509,000 jobs in January. Keep in mind that the official jobs report numbers are being released on Friday. If they're good, like the ADP private payroll numbers were, then that would point to a stronger economy and will give the Fed more leeway in raising rates faster. That could cause downward pressure on the stock market on Friday. Alright, let's get into the 5 stock picks that I found for you guys. Now, for those of you who are new to this channel, my name is Stock Curry. I used to work as an analyst for some large investment banks, and now I analyze stocks for you. Earlier today, I spent hours and hours and hours going through my stock screeners, and I found 5 stocks that were, in my mind, extremely undervalued that we can start buying the dip on or just dollar cost averaging into. Before I get to these 5 stocks, I do want to remind you that I am not a financial advisor, and nothing I talk about today is a recommendation to buy, sell, or hold. These are just my opinions, which may or may not be accurate. So please do your own research before investing in any of these stocks. Alright, the first stock we're going to talk about today is ARCC. This is Aris Capital. They're a financing company focused on business development. Now, ARCC has a low PE ratio of 6.3, but because this is a capital-intensive business where investment portfolio growth is more important than earnings growth, we really need to look at the price-to-book ratio, or PB ratio. In this case, ARCC has a PB of 1.17. Now, fair value is generally considered a PB ratio of 1, so ARCC is slightly overvalued right now. But there's a good reason for that, and I think this actually makes ARCC undervalued. Because ARCC is primarily focused on financing business growth, they will benefit significantly from rising interest rates. And if you expect interest rates to rise by 700% from 0.25% to 1.75% this year, as many analysts do, then that 700% increase in interest rates could provide a significant boost to ARCC's earnings and eventually their balance sheet or book value. Now, it won't be a 700% increase because I doubt ARCC gives out any loans at a 0.25% interest rate, but a 1.75% increase in interest rates could equate to a 20 to 25% increase in earnings, assuming an average business loan interest rate of 7 to 7.5% currently. Now, ARCC is currently about 17% overvalued based upon the current book value, so I'm looking at about a 3 to 8% increase in their valuation from here over the course of this year. And it looks like the analysts agree with me. They have an average analyst price target on ARCC of $23.33, which represents a 5.5% one-year upside potential from Wednesday's closing price. Now, that might not seem like much, but here's where the real gold is. ARCC pays a massive dividend. Their current dividend yield as of Wednesday's closing price was 7.6%. And unlike most companies that pay a large dividend, ARCC's dividend is actually consistent. So this is one stock you can add to your dividend portfolio and feel really good about. The next stock I want to talk about is HBP. This is Huttig Building Products. They're a distributor of building materials. HBP just released earnings on Wednesday, and they beat analysts' expectations of both revenue and earnings. As inflation has skyrocketed and the price of building supplies has increased, HBP has seen a massive boost to their profits. Over the past 4 quarters, HBP reported a combined earnings per share of $1.77. At Wednesday's closing price of $9.74, that gives HBP a price-to-earnings ratio of only 5.5. Now, HBP's continued profits will depend upon whether or not building supply prices remain high. If they do, as might be evidenced by an apparent wage price spiral we might be in, then HBP's profits should remain high for some time to come. The good news is that HBP has also been growing revenues every quarter, so their increase in profits can also be attributed to their increase in revenues. At a PE ratio of only 5.5, I think HBP is worth taking a look at if you think inflation will remain elevated. No analysts are covering HBP, but Seeking Alpha bloggers are bullish on the stock, even though TIPRANKS investors, also known as retail investors, are negative. The next stock we're going to talk about is IMOS. This is Chipmos Technologies. They're a semiconductor manufacturer in Taiwan. IMOS struggled during the pandemic, but came back strong in 2021. While the revenue growth hasn't been super impressive, the earnings growth has been. To put things into perspective, it's best to compare IMOS to Taiwan Semiconductor, ticker TSM. IMOS grew earnings by 115% year over year last year, compared to only a 17% year over year earnings growth for TSM. IMOS has a price-to-earnings ratio of only 7.48 compared to TSM with a price-to-earnings ratio of 26.41. That means TSM is trading at a relative valuation that is 350 times higher than IMOS. Now, TSM does have a stronger balance sheet than IMOS, but with IMOS's earnings growth, I think they can continue to strengthen their balance sheet this year. Semiconductor demand remains strong, and IMOS should continue to grow both revenues and earnings. And if that wasn't enough, IMOS has a large dividend yield of 4.3%. So IMOS is a value stock, a growth stock, and a dividend stock. No analysts are covering IMOS, but both Seeking Alpha bloggers and TIPRANKS investors are very bullish on the stock. The next stock we're going to talk about today is MEOH. This is Methanex Corporation. They're a chemical manufacturer in Canada. MEOH has a low price-to-earnings ratio of 8.29. While they struggled during the pandemic, sales have come roaring back with an average 71% year-over-year revenue growth each quarter. MEOH has over $4 billion in revenue and a market cap of the same $4 billion. They are profitable with nearly $1 billion in cash on hand, $500 million in accounts receivable, and another $500 million in inventory. They do have $2.8 billion in long-term debt, but that is most likely tied to the financing of their fixed assets worth $3.7 billion. So overall, a very strong balance sheet and undervalued based upon the fundamentals. There was only one price target given in the past 30 days, thus the low $48.33 one-year average analyst price target you see here. Now, the one price target that is less than a month old was given 4 days ago by a 5-star rated analyst with a 77% success ratio at RBC Capital. He gave MEOH a $60 price target, which represents a 14% upside potential from Wednesday's closing price. And the last stock we're going to talk about today is WBA. This is Walgreens Boots Alliance, and they're a retail pharmacy. WBA missed on revenues last quarter, but posted a massive earnings beat. Despite that, the stock fell significantly. It is now trading at a very strong technical support level that was first formed 22 years ago. As you can see on the chart, WBA has bounced off of this level multiple times over the past 9 months. Also on the technicals, you can see how the MACD is about to form a golden cross, which is bullish. So technically, it looks like WBA will bounce off of this support level and go back up. Fundamentally, WBA continues to grow revenues every quarter, and they have a very low price-to-earnings ratio of only 6.71. So this stock is undervalued fundamentally. It's no wonder the average analyst one-year price target is $55.17, which represents a 20% upside from Wednesday's closing price. And if that wasn't good enough, WBA pays a consistent dividend with a current dividend yield of 4.14% based upon Wednesday's closing price. Alright, I hope you enjoyed that video and got a lot out of it. Comment down below what you're buying the dip on. And if you're looking for a broker to trade with, I wanted to let you know that Webull is offering the best promotion they have ever offered. This is crazy. If you sign up using my link in the description below and deposit with any amount, even $1, Webull is going to give you 5 free stocks worth up to $9,600. You also get $5 in free crypto when you make your first crypto trade, and you get $75 when you transfer your account to Webull. So if you're on Robinhood and you want to transfer your account over to Webull, you pay the $75 transfer fee on Robinhood, and then Webull is going to reimburse you that $75 transfer fee. This is the best offer I've ever seen Webull do. So if you want to take advantage of that, it is limited time. You can sign up using my link in the description below. You just have to sign up using my link, deposit with any amount, just $1 into your account, and Webull's going to give you 5 free stocks worth up to $9,600. It's crazy. I've never seen it before, but if you're interested in that, you can sign up below. Now, for those of you guys who are not U.S. residents and you are looking to trade maybe OTC penny stocks or options, things like that, you can sign up for Interactive Brokers. Interactive Brokers is a highly discounted trading platform. Trades start at just $1 US, $1 Canadian dollar, 4 euros, or 6 Australian dollars, depending upon where you live. And both Webull and Interactive Brokers both offer the full pre-market and after-hours trading from 4 a.m. until 8 p.m. Eastern Time. Now, I do want to remind you that I have material connections with both of those, so whenever you sign up for either one, not only are you getting a great broker to trade with, you're also helping me to continue to produce these great videos for you. Now, I do want to remind you to please hit that like button, subscribe, and click the bell icon and click all so that you can get notified when I release my next video. I hope you have a lot of success trading, and I will see you tomorrow.